Breaking. Reports and political leaks are sending shockwaves through Wall Street tonight. Claims are circulating that the chair of the Federal Reserve, Jerome Powell, could be under federal investigation. If this turns out to be real, it would be the biggest crisis in central banking in modern U.S. history. And today, we're breaking down what's being claimed, why markets are panicking, and what this would mean for your money, your mortgage, and your investments. Over the past 24 hours, political insiders, financial reporters, and legal analysts have been buzzing about one thing: that federal prosecutors may be reviewing actions taken by Jerome Powell related to Fed operations and internal decisions. Right now, this is still unconfirmed, but here's why it matters. Markets don't wait for court verdicts. They react to risk. And even the possibility that the Fed chair could be targeted by prosecutors is enough to shake the global financial system. The Federal Reserve is supposed to be independent. That means it sets interest rates based on economic data, not political pressure. If a sitting Fed chair can be threatened with legal action, every future rate decision becomes political. That would be like allowing politicians to control the thermostat of the entire economy. Here's how markets think. If the Fed loses independence, interest rates could be manipulated, inflation could spiral, the dollar could weaken, and investors could flee to gold and crypto. Even rumors of political interference are enough to cause stock sell-offs, bond volatility, and currency swings. Because once trust in the Fed breaks, the entire financial system becomes unstable. The Federal Reserve has angered a lot of powerful people. He raised interest rates aggressively to fight inflation, even when politicians begged him not to. High rates slow the economy. They hurt housing. They make debt more expensive. But Powell's job is to protect the dollar, not win elections. If this situation escalates, here's what it could mean for regular people. If politicians gain control of the Fed, they may force rate cuts to juice the economy. That could bring short-term relief, but long-term inflation would explode. That means your savings lose value, your grocery bill rises, your rent and insurance climb. You might get cheaper loans, but everything else becomes more expensive. Even if prosecutors are looking at something, that does not mean charges will happen. High-level cases require strong evidence, political approval, and enormous public justification. But again, markets don't wait. They react to fear and uncertainty. In over 100 years of Federal Reserve history, no Fed chair has ever faced something like this. Central banks exist on one thing: trust. Once that trust cracks, currencies collapse, and economies follow. So now we ask you, do you think this situation will damage the Federal Reserve's independence? Type in the comments A, yes, this is a serious crisis. B, no, it's just political noise. C, I'm not sure. Your answers decide what we cover next. This story is developing fast, and it affects every dollar you earn, save, and invest. Subscribe to Sketchy Topics for real-time financial explainers that cut through the noise. The money system is shifting, and you deserve to understand it.